instead of just locking their money up in physical asset classes, which is real estate, gold, it gets locked.
Mhm.
Those are things that they usually hold on to. It's not
Right.
really an investment as such, because beyond the investment or the money that they put in, there are emotional, sentimental reasons for why they hold these.
True.
This kind of helps their money grow beyond inflation.
Welcome back to an interesting conversation with Mr. Vasanth Kamath, founder of SmallCase. In the previous episode of Founder Story with Vasanth, we were speaking about his journey and of building SmallCase and his experiences. He gave us some really interesting tips, and you should definitely check that out. Having said that, let's move on to the next segment, Dhandhe Ki Baat, wherein we'll deep dive into what Smallcase does and learn a bit more about portfolio investing and asset allocation and a lot of other stuff like that. So, Vasan, thank you so much for doing this, and thank you so much for your time.
Thanks, Shreyas. Really happy to be here.
Perfect. Let's quickly dive into this. Let's start with the origin story of SmallCase, right? You shared the story about how you built SmallCase and how you got started with it, but let's talk about the name SmallCase. What essentially it kind of means, and how did you kind of derive it? How did you come across it?
Sure. So, like today, Smallcase is known as a portfolio of stocks or ETFs. We obviously want to kind of extend that to a portfolio of any financial instrument or security. We are adding more and more asset classes, but uh, today a lot of at least the retail investor crowd knows of it as a collection. It's a brand or a common noun that we've really created with the help of all our partners and industry players.
Mm-hmm.
Uh, on day one, however, it didn't mean much. Wasn't something that we had thought about too much before kind of christening this a small case. Um, it was honestly just more situational where we owned the .com domain for this. It just made sense. Like the first idea that I was toying around, like I said, related to the financial services space was around banking APIs, seeing
Mm-hmm.
if we could take some of the activities that a bank does and digitize those by taking them outside the bank and giving it to any developer who really wanted to do something with it,
Mm-hmm.
much like what you guys at NPCI also do. But I think that time the idea came that most developers kind of code in lowercase, hence small case would be a good name for
Oh,
these set of APIs. The
interesting.
domain was available. It was available on a bunch of other handles that we would wanted as well, so I blocked those. And then when kind of Anugrah, Rohan and me kind of got together to start this portfolio investing platform,
Mm-hmm.
uh, we just put small case. We continued the usage of small case. It kind of fit, had a nice ring to it. uh, Many people liked it, some didn't, but ultimately kind of just rolled with it, and it's what it is today.
Interesting, interesting. But the first time when I actually heard about the name Small Case, with kind of with the context of investing, what came into my mind is पहले के ज़माने में that advisors used to come to your house with briefcase mutual funds और वो सब के. So they had those all portfolio lists and all of those papers in that कि यार इसमें ये invest कर सकते हो इसमें. And
Right.
that case, briefcase का case and a small case, so like वो हिसाब से it kind of fit into my mind. But
No
that's a really
problem.
interesting story, the coding perspective.
No, absolutely. Yeah, that's what. Now that's what it fits. It seems like there's a
Hmm.
story around it for different reasons, but completely coincidental. That's what the whole concept of case wasn't the container or the portfolio that
अच्छा
we
अच्छा.
think of today. Like a lot of people ask us today also, but it's not really a small case, is it? But
Hmm.
yeah, that's what it was, more from the lower case idea
Ah.
versus the small portfolio. Like today also a lot of
Hmm.
users or say partners also say, what is small about this small case? Like it's just the name. There's nothing small about it.
अच्छा.
But yeah.
Interesting, interesting. Uh, I mean, all of our audiences will anyways know about what Small Case does, but would love to hear a bit from you on what did you kind of envision it doing, and what essentially are you planning to do, and what the company currently is?
No, sure. I think this was again when we started. This was 2015. Uh,
Hmm.
there were a small set of investors who were investing in equities. Now, at that time, there were primarily two ways to do it. One was either people were doing it with stocks, not necessarily traders. They were buying single stocks. They had a brokerage account, a trading and demat account. They used to go and buy stocks based on research, what their friends and family said, or um, uh, from their advisors, etc. The
Hmm.
other set of people were folks who were investing in mutual funds. Uh,
Hmm.
Great way to kind of take exposure to the equity asset class. You put money into a fund, it's a pool structure. A fund manager kind of manages that for you, and you get
Hmm.
the benefits of it through a daily NAV, and knowing what you're investing in and the criteria of the fund manager. We felt that that's what. And at that point, the overlap between these two users sets were very minimal. You were either a
Hmm.
mutual fund investor or you were a stock investor.
True.
And our thesis at the start was that this is not going to be the case. This is more of going to be a life cycle for investors where people would start out with, say, something like mutual funds, because it
Hmm.
is undoubtedly the best way for someone to start the equity journey, and eventually kind of get to stocks. And
Hmm.
it's not going to be an exodus from their mutual fund portfolio and then they move it to stocks either. It's going to be incrementally adding on more asset classes, more products, more formats, more instruments.
True.
And we felt these two as approaches were very extreme and very far apart, and something should be there in the middle, which
Hmm.
offers, say, the portfolio diversification of a mutual fund, the professional management that a mutual fund has, at the same time the control, transparency, decision making that a stock investment offers you. And that's
Hmm.
what small case is. It's basically, as a concept, it's a portfolio of stocks where you own the stocks in your demat account, in your own
Hmm.
account. So you know what you're investing in. You have complete control over it, in the sense that you don't like a stock, or you're overexposed to something, or you're like, I feel that this stock particularly is not going to do well. So you have the control
Hmm.
if you want to exercise it. Yet there's someone who's licensed, regulated, registered, professional, who's kind of prescribing what the portfolio uh, composition should look like. So
Hmm.
that's what essentially a small case is. Like, I think the easiest way to kind of explain it has been as a playlist of stocks. Like, and
Hmm.
that analogy also goes in very well with mutual funds and
True.
um, stocks, single stocks as well, where there's multiple ways to kind of consume music. Now you can
Hmm.
do it through like how we used to do it earlier with, say, CDs, vinyl, cassettes, etc., where somebody else is deciding what you can listen to in that. Great way to kind of start
Hmm.
listening to music if you want to do it. Then the next, be it the iTunes songs.pk era, where
Right.
you would download songs yourself, kind of make your own library. That's how
Hmm.
you do single stocks. Or you have playlists that are created by someone else, or you create yourself, and that can be a lot more uh, diverse in terms of what the music experience is. Like, you won't have a CD, for example, say, road trip songs.
Hmm.
You can create one yourself, or you have a playlist today where you say, you're going on a road trip, it's a rainy day, tune down songs, focus songs, etc. You'll find playlists, you won't find cassettes, or you put in the effort and kind of make that. So that's what a small case is, kind of. It's a middle ground between stocks and mutual funds, where it's a portfolio related to different ideas, themes. You can create one yourself, and then you can keep investing into it with an SIP. You can exit partially whenever you want to. You can exit completely whenever you want. And because it's not a pool structure like a mutual fund, there's a lot more uh, flexibility or customization on what these small cases could be. So you
True.
have, say, a small case for affordable housing, you have a small case for specialty chemicals, you have a small case for private banks and NBFCs, you have a small case for
Hmm.
the whole railways expansion in India, not just the railway stocks itself, but also every company that operates in that value chain. So
Right.
you could create a small case for virtually any idea that you have to kind of invest.
Interesting. And I think that was a really great analogy that kind of instantly clarified a lot of things for me on the And actually, this is also partially answering my next question. So that was going to be like, what's the difference between the mutual fund and a small case? You already did answer it a bit, but yeah, would love to hear a bit more.
No, sure. So that's what we think about these as different form factors.
Mm-hmm.
Like you would know this better than anybody, but like even for payments, for example, it's very simply put, how do you get money from point A to point B, or like one
True.
account to the other? There are multiple form factors or formats that you can use to do it.
Mm-hmm.
There's obviously say UPI, there's IMPS, there's NEFT, there's RTGS, there's cash, etc. So the same thing exists for taking any exposure to an asset class. So for equity,
Mm-hmm.
you can invest directly into stocks. You can use a mutual fund. You can use a
Right.
PMS, a portfolio management service. You can use
Mm-hmm.
a AIF if it's a long only AIF which invests into stocks for the long term.
Mm-hmm.
Each of them have their pros and cons. Each of them have
True.
their thresholds. Each of them has their target segment of clients, customers, or investors as well. Like a
Mm-hmm.
PMS, you can't invest less than 50 lakhs. An AIF, you can't invest less than 1 CR.
Sure.
Mutual funds, you can start from 500. If it's a
Mm-hmm.
single stock, depends on how you want to kind of craft your portfolio ultimately. So
True.
small case is also another format where it's not a pool structure like a PMS or a mutual fund or an AIF. Uh,
Mm-hmm.
you have the underlying constituents in your own account. Somebody's prescribing what that portfolio should look like. You can
Mm-hmm.
either follow that or you can basically take your own calls. And because it's not that kind of a structure, it just opens up the range of possibilities or exposures that a small case could kind of provide to you. But ultimately, that's what these are different manners or instruments you use to kind of get exposure to the asset class.
Mm.
It's the same thing,
Interesting.
like for example, in gold as well, right? Or say real estate. You can take exposure to real estate with by buying your own land. You can buy a
Mm-hmm.
house. You can buy a flat. You can buy fractions of a flat. For example, there's fractional real estate. You can buy fractions of a warehouse, fractional commercial real estate, or now say in your demat you can have real estate investment trust where you have
Mm-hmm.
fractions of say office space, for example, that you can own in your own demat account. So
True.
different formats of kind of taking the same exposure, which is to an asset class, which is real estate, or in the small case equity.
Interesting. So I think I got a lot more clarity on it, and thanks for explaining. Just to kind of sum it up, right? So when we look at mutual funds, it's essentially like a CD, like right you said, you can't change the songs that are inside it, you can't change the durations. In case in this context, it would be the weightage, but you essentially have that some expert has prescribed that, and you start using it and start investing in it. When you look at single stocks, they are like कि you invest in this stock इतना, you invest in this stock इतना. You need to be very well informed to understand कि किसमें कितना exposure लेना है.
Right.
And then there is the middle ground that you guys are building, the small case, wherein you either take advice from already registered professionals, you pick up the small cases that they have suggested, and you kind of invest in that. It could be a lot more customizable and a lot more I would say visible mutual funds, which are either indexed directly marked benchmarked to an index, or there could be a lot more, let's say top 50 or mid caps or small case or small caps. But in this case, you could also make it more industry specific or make it so. For example, if I'm really into fintech and I want a small case that is aligned towards that, basically aligns my bullishness of fintech. Probably a few recent fintech IPOs. I want them as a part of my portfolio, and a couple of other startup stocks that have recently got listed. I would probably create a small case of my own, do the weight allocation as per my knowledge, and then I can start doing an SIP kind of a thing on that over a monthly period.
Absolutely.
Got
And that's what this
it.
is a new format that kind of, we built alongside the industry for users, but it's not something completely, you know, new,
Hmm.
right? In the sense that you
Right.
could do this earlier with stocks. We just made it a lot more easier to do it
True.
by kind of productizing this whole experience. So now instead of like earlier, if you wanted to do this, the same thing that you said, like say
Hmm.
India internet startups as a portfolio, you would have to select them yourself. You would then have to position size or like buy each of them individually. You can't have a sub portfolio in a demat account. So then you
Hmm.
invest into them individually, you track them somewhere outside. So it was a little cumbersome. That's what we kind of made very simple by uh, digitizing the entire process, getting it onto one platform, so you can track each of these small cases separately. You can,
Makes
do
sense.
different actions on each. You can invest more, exit, rebalance whenever you want.
Perfect. No, I think this is really interesting, and I think it brings a lot more control over your own portfolio for the new age investors, and kind of also helps you invest in the industry that you're really passionate about, maybe clean tech or maybe solar and all of those things as well. And I've seen a lot of new small cases come up on that piece as well. So that's really interesting. Uh, Having said that, right, let's move on to the next question, which essentially kind of we try to explain a very complicated or difficult concept in a very simple manner. I like to call it explain it to me like I'm a 5 year old. And for today's topic, for today's conversation, the topic is asset allocation.
Got it.
So yeah, you can try and explain it to me like you're explaining it to a 5 year old kid.
Sure. No, I think interesting choice of topic. I think again, this is something that is a jargon that everybody in the
Hmm.
industry really uses. That your asset allocation has to be right. Think about it, asset allocation. Keep rebalancing your asset allocation, etc. So it's become a very jargonized term today. But I think it's very simple. I'll
Hmm.
try my best to kind of explain it to a 5-year-old. But uh, asset allocation is very simply just how you are dividing your investment across different asset classes.
Hmm.
One analogy for this would be, and like the reason it's overwhelming, and this is not the explanation, but the reason it's overwhelming is that it's what there is a asset allocation. When somebody tells you this is my asset allocation, it looks like a plan that they've started like on day one, that they've kind of gotten to this asset allocation. And in most
Hmm.
cases it's not, right? It's like you start from say 100% allocation to one asset class. You can't start day one from having an ideal asset allocation, and you slowly get to
True.
what is ideal or optimal for you, and then over time kind of you keep tweaking those based on different other variables, considerations that you see in your own life as well. But
Hmm.
from a 5-year-old's perspective, it's something like how they learn in school, the education system. Like they don't decide it. In the case of asset allocation, you have to decide it because there's no cookie cutter, but it's how you learn. Like KG is all about kind of learning the alphabet, learning the numbers. Uh, that's it. Like it's just basically, to sum it up, it's English and math. So,
Hmm.
or before even that, it's just basically sounds, for example, or the alphabet itself, right? Like so, on day one you're 100% there. Then you have a little bit of numbers coming in. Then you have algebra. Then you have say social science. Then you have say physics coming in, chemistry coming in, and over time you have like a overall portfolio of subjects that you need to learn, so that your education is more well rounded. You kind of get exposure to different things, so that when you choose a specialization, you have the basics in place. The asset allocation is very similar. Like you start on day one. Most people start out with something like fixed deposits. There's a different set of people these days that are starting out with something like equity only.
Hmm.
But over time, it's important to start adding more asset classes, so that on a portfolio level, you are diversified. You don't, it's not as volatile as that asset class that you're just exposed to.
Hmm.
It can weather different shocks, external, macro, micro, etc. And kind of, it becomes healthy. And every year, in the case of say students, every year that curriculum changes. Here, that's what,
Hmm.
either quarterly, half yearly, annually, whatever you want to do. You keep looking at this and saying whether I should keep tweaking it, or whether I should kind of keep it the same. But that's,
Hmm.
in a nutshell, what asset allocation is. You don't get there on day one. You start from one place where it's 100%.
Right.
You then slowly start adding more, and you get to an ideal asset allocation in a span of say a few quarters from when you start.
Makes sense. I think that was really enlightening. Uh, Kind of gave me a new perspective on the education also, as to say. I never thought of it from a portfolio perspective. You're adding that knowledge base to your portfolio of subject and to your understanding. But yeah, no, I think it makes sense. Uh, Having said that, right? In the previous episode, when you were in of the founder story, essentially, we were talking also about adding more asset classes to small case, right? As of now, it's equity, but you're planning to add more asset class. And now, if you look in the industry, I think a lot of new companies are coming up with new asset classes like P2P lending or NCDs, corporate debt, and a few other pieces. So, wanted to get your opinion on how safe are these investment classes? How do you think retail investors should look at it?
No, sure. I think this is only going to kind of mushroom in the sense that
Hmm.
as more participation comes in, as kind of more money is allocated to the financial markets in general, there will be more products or asset classes or asset types or exposures that will keep increasing. I think the first filter definitely that an investor should look at is if it's regulated, because then there is a course of action in case something goes wrong.
Hmm.
So whether there is sufficient regulation to cover the investor as well as the product that you're investing into.
True.
Second is more about, it's more personal, but like as is most topics in personal finance, but I think it's more personal where you understand the risk of what you're investing into. Like this could be true for even something as regulated as say stocks, right? Like there
Right.
there are say 2000 stocks listed. So
Hmm.
not like given stocks are extremely regulated, there's bunch of scrutiny, checks and balances that goes into kind of getting a stock listed, etc. But
Right.
there is a stock that's more stable, there's a stock that you know uh, uh, and it's usually related to size as well. There are
Hmm.
stocks that are very volatile, very risky, usually the smaller stocks. So then it depends
True.
on kind of what your personal preference is on how much risk you want to take in an asset class.
Hmm.
So, for example, say like something like a P2P lending, debt, like corporate debt, bonds, um, fixed deposits, etc., are obviously something that's coming more and more digitally to the retail investor.
Hmm.
Now, it's a personal choice. Like there are advisors who will tell you in fixed income, why take risk? But
Right.
there would be use cases where maybe 25 to 50% of your fixed income allocation could take a certain higher risk because the rest
Hmm.
50% is at zero risk, like in FDs, near
Makes
zero risk,
sense.
like FDs or say government bonds, etc. So
Makes
that
sense.
really depends on how you want to kind of craft your portfolio. But
Hmm.
I think the regulator is doing a phenomenal job of ensuring that say and clarifying, also saying that these are things that are regulated, these are things that are not regulated.
Hmm.
Unregulated stuff, if something goes wrong tomorrow, you will have no way of kind of figuring out how to salvage anything that you've invested in there. So that's not under our ambit, but there's a set of things that are under our ambit, and there is going to be legal recourse, there is going to be a place that you can come to in case something goes wrong. So I think the first filter is definitely whether they fall under the regulator's ambit, and the second is more the risk within that is more personal about how you want to take it.
Makes sense.
But I think barring a few asset classes, I think regulators on top of everything, uh, and kind of has a very clear view about how they want to kind of shape that exposure or asset class going ahead as well.
True, true. No, definitely makes sense. Having said that, I think talking about the asset classes which are unregulated, a few popped them into my mind, and I kind of now have to ask you these questions, and you feel free to skip it, and it's completely fine. But what are your thoughts on cryptocurrencies as asset classes? Since as of now, it seems like it is kind of past its hype, right? The hype has actually died down a bit, and not everyone is jumping onto it.
Right.
But what do you think about of them now as an investment class for retail investors?
True, as in like that's what interesting that I'm discussing this with you because
Hmm.
kind of by very term cryptocurrency is supposed to be a currency and hence more of a uh, method of transferring value, like it's a payment
True.
method versus
Hmm.
really asset class. And I think that what's the intended use case, or at least how at least users or consumers or even the industry was providing them, right? Like I
Hmm.
remember this moment where on the same day or like in the same week, I think Stripe removed cryptocurrency as a method of payment. And that
Hmm.
week itself, I think Robinhood added it as a way of trading or investing as an asset class. So that shift has been interesting where, from a method of transfer of value, it's become a storage of
Hmm.
value. Like, so And then then it comes down to whether there is intrinsic value in it. Now today the intrinsic value in it is one, the use cases that kind of it enables. Second
True.
is that it's limited in quantity,
Hmm.
like say gold or real estate. There's only a
Hmm.
finite supply, hence because there's a clear use case that with gold you can do this, with real estate you can live in it, you can
Hmm.
do commercial activities, etc. So they keep getting more and more valuable, and hence it makes sense to own some of them with the return profile that you're entering into it. So I'm not sure what, I'm not been tracking the sector, so I'm not sure what the current use cases from a cryptocurrency perspective are and how widespread they are. Um, I think from an investor's perspective also, considering there's enough liquidity in it, that more than the hype, there's enough participation in it. Uh,
Hmm.
they could look at kind of allocating some bit to it, but again, today in the Indian construct, it's not directly regulated by anybody, which is where
True.
I would stay away from the asset class as a whole.
Makes sense.
So I'm sure as the use cases uh, come by, if it's accepted, there will be regulation that comes over it, and once it's
Hmm.
regulated, definitely advisable for people to kind of start allocating whatever percentage of their portfolio they want into this. But today, given it's not regulated in our markets, it's very tough in case something goes wrong. Uh,
Hmm.
like there have been multiple cases, right? Exchanges shutting down, people not having access,
True.
people
True.
can't withdraw, etc. So like, I wouldn't kind of participate in it if that's where the state of the market is.
Perfect. Makes sense. Thank you so much for sharing that. Let's kind of move on to the next question over here, which is essentially a bit more around how do you see the industry dynamics shaping up, and how do you see the macroeconomic impact if small case essentially achieves, let's say, a 30% penetration of investing population of India?
No, sure. Like when you mean small case, I'm guessing it's also kind of that 30% of the Indian population is also investing,
Yes,
which is kind of an aspirational state to be in at some point, in the sense
true.
that we have seen a lot of economies as they get developed. This is the
Hmm.
number that also moves along with it, where
True.
be it in terms of mutual fund or equity assets as a percentage of GDP, be it in terms of, say, household allocation to equity or capital
Hmm.
market asset classes. I think it will happen at some point. Definitely, the last decade has been very helpful in getting us there. But I think the impact of this is going to be twofold, right? One is on the investor themselves, where instead of just locking their money up in physical asset classes, which is real estate, gold, it gets locked.
Hmm.
You know, those are things that they usually hold on to. It's not
Right.
really an investment as such, because beyond the investment or the money that they put in, there are emotional, sentimental reasons for why they hold these.
True.
This kind of helps their money grow beyond inflation,
Hmm.
and it's more realizable, because in this case, again, thanks to regulators, the infrastructure that's available, like today you want to take money out of your stock, your small case, your mutual fund, the
Hmm.
next day it's back in your bank account, right? So
Right.
like the industry has also ensured that the cost of transaction is very minimal, whereas the same thing for, say, physical assets is obviously not just time consuming but extremely expensive as well. So I think
Hmm.
it will definitely have a very, very positive impact from an investor perspective, because this is equities is mostly liquid money
Hmm.
that will see appreciation far greater than inflation if you're obviously investing
True.
into the right companies or the right segments. um, from a economy perspective, I think it just helps get more money to work, right? Just mobilizes more money.
Hmm.
Anything, like even if you're investing into, say, something like a fixed deposit, it is giving deposits to the bank that they can lend out for
Right.
more value creation, job creation to happen. If you're investing into companies, they are basically being able to be create more value, more jobs in the economy itself. So it's
Hmm.
important that kind of at 30% penetration, we're already starting to see that, where India can be dependent, or India does not need to rely purely on foreign capital or
FIIs, yes.
international money coming in. They can
Hmm.
uh, uh, depend on domestic capital from their citizens, from Indian investors itself being able to kind of put money to work for the entire enterprise and economy. So I think it's going to kind of have a crazy compounding effect in terms of how not just the investor kind of looks at their own personal finances, but also in
Mhm.
how the economy really benefits from this. So uh, yeah, whenever like we are, like I said, we've already started seeing this. This is at maybe 5% penetration. When this
True.
goes, say, 6x, I honestly can't even imagine what it could really do to the Indian economy.
Definitely, I think you made a very valid point because, as you rightly said, like money put into companies will eventually lead to more value creation in India, increased employment, increased amount of options for the customers, and overall a boost in the economic activities. I think that could be a really aspiring state to be into. And
And
I
also
think,
from the investor's perspective, also like
Mhm.
India is now like the hotspot from a growth perspective
True.
globally, right? And like it's important that we as Indians also realize and gain from that versus just
Mhm.
say FIIs realizing that gain. I think it's important that
Right.
Indian investors also participate in that, not just by being
True.
part of the workforce, by creating value themselves, but also kind of
Investing back.
investing into
Hmm.
enterprises that are also creating value.
Makes sense. Two questions here, right, that come to my mind. When we speak of achieving that number, maybe 30% or maybe a bit more realistic, let's say around in the next 5 years, probably 10-15%, what do you think would be two greatest catalyzers for that growth?
Um, Very broadly, right? I think one would definitely be infrastructure and systems, and
Hmm.
you're definitely someone who's contributing a lot to that. But I think if all of this infrastructure that's enabling things to be instantaneous
Hmm.
kind of come in, I think what could really that spurs on a lot of things. Like I'll just give a simple example. Like my parents, right? Like 5 years back,
Hmm.
they wouldn't buy anything online. Not 5 years, maybe 6, 7 years back, they wouldn't buy anything
Right.
online. They would essentially be like, no, there's a value or trust associated with offline.
True.
If there's a large store, I'll go there and shop.
Hmm.
Today, it's completely flipped to the opposite. Like if someone doesn't have a great app, someone doesn't have a um, great website or great user experience, like
Hmm.
this brand might be shady. This I wouldn't use that, right? So that
Makes
whole flip
sense.
has kind of come in because of the trust and adoption of digital financial services, financial transactions.
True.
Like if that wasn't possible, like that's what you might want to order from that, but then you would still kind of take that call saying that I'm not okay transacting on this website yet. So
Hmm.
I think that infrastructure really enables a lot of comfort, security, for more people to participate. So like having this sort of infrastructure, like UPI, all the things that the regulator is up to in terms of ensuring that the investor is protected, they have full
Hmm.
access, they have ownership over their own assets. I think these changes are one going to kind of definitely improve participation. More specifically, I think one thing that I feel is going to be a big uh, catalyst is going to be the account aggregator system.
Hmm.
Uh, I think something that you know India has always faced is that different companies, even though it's the user's data, companies call it my data, customer is mine, etc. So it's not very free flowing, the data, or details about one's holding, one's bank balances, etc. So I think this whole framework of the account aggregator is really going to democratize that. And
Definitely.
like we are thinking of certain use cases, but I'm sure there are 10x more use cases that we are not thinking about today, but once
Hmm.
it's possible, like people will incrementally build upon. It's similar to UPI, but I think it's going to just happen at for a far wider set of use cases that this data democratization is really going to build in.
True.
Like with these two things, I'm sure that India's economy, education, literacy of people is just only going to grow. So uh,
Hmm.
I'm treating those as givens versus kind of the things that could really spur this on, which I think is
True.
like uh, financial infrastructure and account aggregators specifically.
Definitely. And as per you, right, currently, what is stopping India from reaching a rate of 10% to 15% penetration from an investor's perspective?
I think depth in the markets. Like
Mm-hmm.
today, there are, like I said, 2,000 companies listed. Now that 2,000 companies can only grow at a certain pace, like
Right.
sustainably or healthily, uh, and that's attracting good interest
Mm-hmm.
from all communities, be it domestic institutions, foreign institutions, the Indian retail investor. Uh, I think for this to kind of like double, even if you say 5 to 10% or say 6x, then
Mm-hmm.
the companies need to be able to absorb this kind of capital as well. So,
True.
which kind of means that there need to be more companies
Mm-hmm.
listed. Like depth there needs to increase. The kind of companies that are listed need to be more diverse.
Hmm.
It can't just be say related to 5 sectors, 10 sectors. That will
True.
see an explosion. And I think each of these companies will also kind of expand their ambitions and their plans, so
Hmm.
that they can take this capital and actually put it to good use versus incrementally kind of growing in a certain space. They can invest more freely into more spaces. So I think it's broadly market depth increasing
Makes
that
sense.
kind of will enable this to be put to good use. So, sure, today that 5% can become 10%, more money can enter the markets, but that's only going to cause probably say dismay in the medium to long term, because companies won't know what to do with that capital. So more companies coming, these companies kind of uh, widening their ambitions to a global stage,
Mhm.
to more sectors, to more areas, will only make it easier for this money to actually see value and gains in the long term.
Perfect. No, I think that really makes a lot of sense, given the fact that as of now, as you said, if there are only 2,000 companies in the Indian market, there is only so much that they can grow, and there's only so much capital that they can absorb, even if investors become ready to invest. So that depth has to increase, and the variety of the sectors which are currently slightly limited, right? Like we also now seeing MSME exchange come up. We'll also
Absolutely,
see a couple of other, more and more fintechs and more other kind of startups kind of listing, providing that depth and that, what do you say, that volume in the market, so that more and more people can kind of, the investors can kind of get into it.
definitely.
Uh, Having said that, this brings me to the last question of this specific segment. Uh, with the given the advent of the emerging technologies like, most recently the generative AIs and previously blockchain and machine learning and all of that, which technology would you bet on to kind of take small case to the next level?
Um, Very tough to basically forecast this, because that's what
Hmm.
uh, the underlying technology itself is progressing at a faster pace than at least I can kind of make sense of what the application could be.
Hmm.
So, kind of every time I think of a potential application, the technology has gone a little bit ahead, and you're like, okay, so you can do 2x more things or something like
Right.
that. But I think definitely this whole commoditization of AI being available anywhere, I think uh, we are using it right now. I don't think you know it will start, at least in our sector in the financial services space. I don't think it will start um, becoming widely used from a user facing perspective yet.
Hmm.
I think considering its money, considering its people's nest egg savings,
True.
earned money, I think it needs a lot more time, iterations, effort before you can really put it in front of the user. But
Hmm.
in terms of what it can do to internal processes, what it can do to kind of make your backend a lot more scalable and efficient, I think
Hmm.
that's something that we at Small Case are very excited about, and are already starting to use it in many of our processes, from research to customer support, etc. Because it's substituting hours of human effort. Uh, so it's not replacing that, it's just making it a lot more faster, so people can do more. So that's how we are at least utilizing it here. So I think that's something that very, very excited about.
Perfect. No, I think that is super interesting and really well said, right? Given the fact that people's money is involved, wealth tech as a sector will kind of be slightly slow to adopt this because there'll be a lot of back testing and a lot of kind of testing to do before you kind of use AI in asset allocation and all of that. But as you rightly said, optimizing your operations and kind of going on the side of customer support and having that as a first point of interaction could probably be something that is really really doable and kind of can help you scale up faster.
So, like,
So,
I think it's already
mhm,
starting to get used in the advisors toolkit, right? For example, like
right.
advisors would take a lot of time because they would have to go through troves of kind of reports, data to kind
Mhm,
of present to you how your portfolio is looking and uh,
right.
what's happened in, say, for example, the last quarter, last half year, last year. I
Mhm,
think that's what that can completely be replaced. The advisor gets
definitely.
more time to kind of uh, drop insights on what's going to happen or kind of take time
Mhm,
and build that relationship better, kind of do this across multiple users versus having to put in the time and you know summarize things or dig through things to kind of find
mhm.
these pointers.
Makes sense. Makes sense. Perfect. Vasan, thank you so much for doing this. I think this has really been a pleasure. And this brings us to the close of the Dhande Ki Baat segment. Let's quickly move on to the next segment, which is one of my favorites, the rapid fire round.
Sure, Srinath. Looking forward to it.